Welcome everyone, and hello. Thanks for joining us on another virtual investor event hosted by NZX. My name is Doug Frame, and I'm with the Capital Markets Origination team here at the Exchange. We have three companies presenting today, and I'll just kind of run you through the format real quick as a reminder, in case you haven't joined one of these before. Each company has about 15 minutes to present, and that'll be followed by 5 minutes of Q&A. And we really want as many questions as you can. Feel free to fire them away. The way you do that is up in the chat box on your webinar screen. There's an area to enter questions that will come to us, and we'll filter them through to the presenters. If we have questions we don't get to, we'll send them out afterwards so you can get answers. So even if you've missed your chance and you want to ask questions, definitely send it in and we'll go from there. So I will start by just presenting. We've got the three companies we have today are AO Frio, which is the ticker AOF, and we have Ventia, VNT, and TruScreen, TRU. So we're going to start with AO Frio, and we have, I'll just give you a quick background. They are a global refrigeration technology business and help ensure that their customers provide food and drinks that are fresh, safe, and delivered and sold at the right temperature. So we have Greg Balla, the CEO, and Genevieve Clark, who's the VP of Product. So I'm going to turn it over to you, Greg and Genevieve, and you can take from there, and I'll jump back in as you get close to the end. Thanks.
Kia ora, everyone. Well, as said, I'm Greg Balla. I'm the CEO of AO Frio, and with me is our Vice President of Product, Genevieve Clark, and we're really looking forward to sharing about our business today. Today we're going to talk through who we are as AO Frio, where we're going as a business. We'll discuss our strategy for building what we call is our core business, and we'll also expand on that and talk about what we're doing to enter some new markets. Just please note the safe harbor statement on the screen. So AO Frio is a technology company that helps our customers keep food and drinks fresh and safe at the point of sale. Our main customers today are global beverage brands like Coca-Cola, Pepsi, and Heineken, and they use our technology to manage their fleets of commercial bottle coolers or commercial refrigerators. If you think about your corner dairy, your convenience store, or your supermarket, you see rows of these bottle coolers, and our technology is in them all around the world. Our technology collects over 200 data elements from each of these commercial bottle coolers. It uses the information that it collects to manage the performance of that individual cooler, but it also transmits the data to the cloud, where we aggregate the data and use algorithms to provide our customers with highly valuable actionable insights that allow them to improve the performance of their whole fleet. On the screen now, you can see some of the key data about us in our market today. Our IoT business, which is about 50% of our business, goes into what we call the branded bottle cooler market. And this business started in 2016. And we have now 2 million bottle coolers connected to our cloud platform. Our IoT business, which as I said is about 50% of our revenue, has been growing at a compounded annual growth rate of 22% over the last 5 years. The size of the market, or the serviceable available market that we play in this bottle cooler market, is about a $300 million business annually. This market is essentially our customers like Coke and Pepsi and Heineken, etc., building new commercial refrigerators. And they build about 3 million new branded bottle coolers each year, which translates to that 300 billion that you see on the screen. And we have about 25% market share for our IoT solution, and about 10% market share for our motors business in that new build bottle cooler business. But we have big aspirations for our organisation, and not only are we planning to continue to grow in that bottle cooler market, but we're planning to enter some adjacent markets with our IoT and motor solution, expanding our serviceable available market from the $300 million it is today to over $6 billion While entering the new market segments, is certainly challenging, we believe we can leverage our global footprint, our current channel relationships, and our leading technology position to accelerate our business over time and give us a real opportunity to take some share in that $6 billion market. Jen will talk more about the new parts of our business, so what we're doing to expand from the bottle cooler market into new segments shortly. I would just like to say from an ESG perspective, we are certainly accelerating our own effort as an organisation ourselves, but we're also helping our customers with their ESG effort, because a big part of our solution helps them manage the energy of their commercial refrigeration fleets. And so we know that the targets that we set have to enable our customers to hit their targets. So certainly our targets will be similar or more aggressive than our customers' ESG targets. So what we're going to do now is I'm going to talk a little bit about our branded bottle cooler market, or our current market, and then Genevieve is going to talk about our approach for entering new markets, in particular the food service and retail market. That's okay. Today, our revenue for the branded bottle cooler market makes up about 70% of our revenue. And quite interestingly, our biggest market is Latin America, contributing about 80% of that revenue. Our solution in this market provides value to our customers, Coke, Pepsi, and Heineken, through essentially what we call four value pillars: fleet management, commercial management, maintenance, and energy management. As some examples of the value that our customers get, customers lose up to 15% of these commercial refrigerators each year. So a corner store closes down or someone steals it. So that's a huge amount of loss. And we can track and monitor the location of these coolers. And we've helped reduce that 15% down to as low as 1% in some of our customers. We're also able to monitor the usage of the cooler and obviously the temperature, which allows the customers to optimize the size of the cooler in a location and improve the planogram, or the products that they put in the refrigerators. Our algorithms can also detect a fault in the cooler before the cooler actually breaks down, and sends alerts to the maintenance team indicating the type of fault and what needs to be done. So it really reduces the amount of time that someone needs to do from a diagnostics perspective, but also means that if they do have to go out to a cooler, they only go once, because they go with the right components to do the maintenance job that is necessary on that cooler. The fleet sizes from our customers, some of our customers have about 1,000 coolers, but others of them have 300,000 coolers. And these coolers are really spread out around cities and rural areas and so on. So managing this and servicing these large fleets of distributors' coolers is really logistically challenging and expensive. So that's why our customers choose to connect their coolers through our technology to the cloud to be able to access those insights and improve the performance of their whole fleet, reducing their costs, increasing their revenue, and reducing their energy. This year, we are focused on from two key initiatives, or our short-term strategy is around launching our IoT solution into the North American and European market. As I said before, most of our revenue comes from Latin America, and the other part really comes from the APAC region. So today we have no business for our IoT solution in North America and Europe. So we have been developing our technology to make it more applicable for those markets. And so key thing for us for FY24 is to launch into the North American and European market. The other key strategy element that we're focused on is providing a more robust energy solution to the market. We have just demonstrated that we can help our customers reduce energy from these coolers by up to energy use of these coolers by up to 54%. And the solution we're talking about, we've named the solution our Frio Inside, and this was recently featured in an award that we won as part of what's called the Beer Coalition Summit. So this is a group of global brands, the Coke, Pepsi and Heineken, who have come together with a real focus on reducing their impact on the climate. And so we presented at that and were winners in our category by the our Frio Inside solution. And so a big part of our push for our next financial year is to get this solution launched into the market. While the branded bottle cooler market is relatively mature, the rapid technology innovation is continuing to increase the value that can be provided to customers in this market. And we are one of the leaders of this innovation. So in summary, for this branded bottle cooler market, which is our core market today, our growth strategy is to focus on entering or taking market share in new territories, North America and Europe, and introducing new value-added solutions for our customers. Example, the energy management solution. We are recognised for our technology leadership and great in-region customer support. And that's why we've been successful and will continue to be successful in this branded bottle cooler market. We're really positive about the future for this part of our market. But now I'm going to hand over to Genevieve to talk through the new opportunities. Thank you, Genevieve.
Okay, so what I'll touch on now is our strategy for expansion into new market segments. So we're in the process of exploring adjacent markets that will enable us to increase our margins, establish recurring revenue streams, diversify our customer base, and provide long-term growth potential. And we've prioritised segments that we think will give us the best opportunity to leverage and build from our existing product investments. And one key example of this is food service and retail. The food retail and food service space includes mid-sized supermarkets, convenience stores, micro markets or food service companies such as restaurants and fast food chains. And these are organisations that manage multiple sites and are interested in managing those sites, their equipment, the quality and safety of the food and beverages that they serve, as well as their staff environment and processes. We excluded large hypermarkets from this segment as their product needs are more complex and they're already served by larger competitors. With a serviceable available market of 4.5 billion, this market presents us with an opportunity because we already have existing products that can be adapted to suit it. It's a highly fragmented market with attractive gross margins and no key global players. And in fact, initial research we've undertaken in the US with NZX suggests that the market is receptive to recurring revenue models and IoT gross margins of 60 to 80% across hardware and software. Plus, we have initial channel access with our established motors business, about 75% of which is sold into food retail already. We have some promising early adopter work underway with 4 different customers across 5 pilot locations in Asia Pacific, South America and South Africa. And we're already delivering value at these sites and continue to learn and refine our offering towards achieving product market fit. We expect to launch our MVP solution in this space next year. So to wrap up, our Frio is well placed to leverage our global footprint. We have no shortage of opportunities and a targeted expansion, leveraging cash from our existing business to fuel our growth into new segments will support our recurring revenue and diversification objectives. And while it's taken us 7 years to get to where we are with an IoT solution in the branded bottle cooler space, we anticipate we can be much faster to market with our next solution because we already know how to do this. We've got in-region relationships and customers with whom we can work closely on a solution, and we have an existing product base to build on. So really, it's now up to us to execute well on our plans, and we really look forward to updating you more on our progress in future. And that's it from us. We're happy to open for some questions.
Nice, thank you guys. Definitely have questions coming in around new market opportunities, and I'll try and summarize a few. But you mentioned the how you help customers comply with their ESG goals and strategies. Is that a story that you leverage in your sales approach, and especially as you go into new markets? Is that something that is becoming pretty important that you're leveraging as part of your story?
Yeah. Oh, absolutely. You know, we see that as one of our key value pillars, both within our existing segments, so that's the bottle cooler space, but also absolutely front and center for new spaces such as food service and retail as well. It's, you know, the time to be thinking about, you know, what we can do in the energy space is now. We know that it's just every company we talk to, you know, wants to know how we can help them deliver value and, you know, meet their needs in that space. So yes, very much so.
Yeah, very exciting. And then in terms of the expansion and opportunity in the US, would that require a new sales initiative and bringing on additional marketing and sales efforts, or where are you guys at in that process? You said it would go into next year, maybe get underway, but it sounds exciting. And what's involved in getting that up and running?
Yeah, so certainly we already have people, a team in the US and in Europe, but we're certainly looking to add to those. To help us get started in the North American market, we moved someone who has been very successful in the Mexico region, or North Latam, into the US to get us started, but we will be looking to add people into both of those regions through this year to support moving into that region. One of the things that we have found is that to help customers be successful with IoT, it's not just selling some product. You actually have to support them through implementation, getting it integrated into their business processes so that they get the real value from it. So it's really important. We found it's been really important to have people on the ground who can work with customers and, you know, if you like, handhold them through the implementation to make sure they're getting real value from the solution.
Awesome. Well, guys, there are more I'm going to send you, but just in the sake of time, we'll move on. And thank you very much. And we appreciate the time and look forward to hearing from you as things unfold next year. So thanks.
No worries.
Okay, thank you.
Thanks.
Thank you very much.
So we got Ventia next, and I'm sure everyone's familiar with Ventia. They're a large leading infrastructure service provider working with clients across New Zealand and Australia in different sectors. Probably see some of their trucks around and some of the projects they're working on as you go about things. So we've got Mark Ralston here, who's the Group Executive of Telecommunications at Ventia. And I'll turn it over to you, Mark, and thanks for joining us from Australia. And we'll be back in 15 minutes or so with some questions. So thank you.
No problems. Thank you, Doug. Well, firstly, good morning, everyone, and thank you for the opportunity to talk to you today about Ventia. Ventia is a leading essential infrastructure services provider that operates across the Australian and the New Zealand market. We operate in around 400 project sites across Australia and New Zealand. In New Zealand, that equates to about 40 different sites. We have a combined workforce of over 35,000 people, consisting of about 16,000 employees and a large subcontract base that we utilise on a range of projects. We've had over 100 clients and many long-term customers that we operate with across the various sectors, which I'll talk through in just a second. The New Zealand market equates to about 12% of our group revenue. In terms of our presence in the New Zealand market, we work across a number of areas. As I mentioned, we have about 40 active project sites, about 5,500 combined workforce, and some specific examples which you may be familiar with from a telecommunications sector perspective, which is the business at Ventia that I lead. We've been involved in some iconic projects. We've done a lot of work with Chorus over the last 10 or 15 years. We've built around 70% of the UFB, the ultra-fast broadband network across New Zealand. And most recently, earlier this year, we completed a significant project rolling fibre from Te Anau to Milford Sound, which was a tremendous achievement given the terrain and the conditions that we're working in that environment. From a power perspective, we maintain and operate most of the national grid in New Zealand for Transpower. You may see a lot of our vehicles and staff in the Auckland area where we do asset and facilities maintenance for the Auckland City Council. And then from a transport perspective, we're maintaining the transmission gully road network outside of Wellington, and also a range of road corridors in and around the Auckland region as well. In terms of our business and the way we organise and operate ourselves, a very diverse infrastructure services business operating across 4 key sectors: defence and social infrastructure, which accounts for about 43% of our group revenue, infrastructure services, telecommunications and transport. Some other specific examples within each of those sectors. From a defence perspective in Australia, we maintain and provide services on defence bases at about 70% of defence bases across Australia. We provide facilities maintenance in hospitals, schools, and a range of government facilities, and a number of other areas as well. Infrastructure services is a lot of our utility style work, so water utilities, electricity, gas, a large environmental services capability where we do remediation of contaminated sites. And the telecommunications is everything from design, build, operate and maintain of telecommunication networks. I touched on our New Zealand presence in Australia. We've been the company that's provided a lot of the build services around the NBN, the National Broadband Network in Australia. Over 40% of that network we've built over a long period of time. And then in transport, maintaining roads and tunnel networks on behalf of private organisations as well as government authorities. Our strategy at Ventia is to redefine service excellence, and we do this by being client-focused, innovative and sustainable. Safety and health is our #1 priority and our #1 promise, and given the large-scale workforce that I touched on earlier is critical and really is our licence to operate in the areas and the services and for the customers that we provide services for. We are a people business. 35,000 workforce people are at the heart of our business. Client focus, really that the ultimate sort of measure of success there is our renewal rates, and to the half year this year we were able to secure 90% of renewals of all works bid, so a great indicator of our client performance, but we continue to seek ways to offer greater solutions to our customers. Innovation, continually looking to redefine the way we provide services. Innovations at a project level could be improvements to specific items, or it could be large enterprise changes. And from a sustainability perspective, we're committed to a diverse workforce, but also committed to a range of environmental sustainability goals, a recent signatory to the Science Based Target Initiative. In terms of our markets, we operate in large and growing markets. In 2023, we operate in a market across Australia and New Zealand estimated at $73 billion, growing to about $88 billion by 2026. And as indicated by the chart on the page, that growth is coming through our sectors that we're operating in today. The New Zealand market in 2023 equates to about $6 billion of our overall market size. And so we believe with our position, there's significant opportunity in our existing markets for further growth. The key drivers of our market growth are elements I'm sure that we can all relate to: the size and growth of asset base, the ageing of assets across Australia and New Zealand, population growth, increasing outsourcing trends from government agencies are a factor in the growing market, and exposure to mega trends such as the energy transition are all key elements that are driving growth for our markets. In terms of our financials, we've delivered strong half-year financials to the end of June 2023. And in October, we also reaffirmed our end of year guidance, tracking towards the top end of the 7 to 10% NPATA guidance that we've provided to the market. Our revenue has demonstrated strong growth for the first half of the year, up 11% over 2022. Our margins remain strong and high for the sectors that we operate in, and we're seeing strong cash conversion and work in hand performance across our business. In terms of dividend payouts, 8.31 cents at the half, and 75% of NPATA there as well. So strong dividend growth compared to half year 22 to half year 2023, 11% growth in dividends. In terms of our long-term investment proposition, we do believe, and we are targeting revenue growth faster than market, so back to the 6.6% market growth CAGR indicated earlier. We're seeing and believe that we're targeting growth at 7 to 10% revenue growth. We continue to target high conversion of profits into dividends at 75% of target NPATA payout ratio, and growing dividends as well for our shareholders. So in summary, a very strong investment proposition. We're very confident in the outlook for our infrastructure services business, in particular in New Zealand and Australia. And I'll pause there and invite any questions. Thank you.
Thanks, Mark. Appreciate it. And there are questions, and one of the kind of common themes is around technology, not so much adjacent markets, but talking about the focus on customer service and satisfaction. Are you guys developing products around technology, AI, digital services, things that kind of enhance the user experience of the groups you kind of interact with?
Yeah, good, really good question. Thank you. And one of the key elements that I touch on to start with is the enterprise system that we have in place today. We have a standard enterprise system which sits across our business, which provides a terrific platform for, first of all, standardization and consistency of the way we operate our business, which drives really strong performance and, as I said, consistency across all our projects. So a really strong base platform. But look, absolutely, Doug, continued investment in technology in the areas you've identified. We find in some areas and some markets, the end customer needs are slightly different. But a lot of what we do is workforce and workflow management. So how we can drive automation and efficiencies in reducing truck rolls as a common term, in terms of reducing the amount of times we need to send vehicles out or crews out to do work. So definitely a key part of the strategy is the continued investment in digital solutions, and recently recruited a number of key people in our business to drive that agenda further as well.
And would those, I guess you don't know, but just be considered part of the customer satisfaction experience, or could they be things that you monetize and charge on for increased revenue on their own right?
Yeah, good question. I think certainly our customers are continuing seeking ways for us to innovate, either to be able to operate more efficiently or to assist our customers in delivering against their strategic objectives as well. So a lot of the innovation is certainly around customer satisfaction and differentiates us in the market when we look at new work that we're pursuing. But equally, yes, I think there are opportunities to monetize. That's something that's been continually assessed. We have an IoT capability that we have deployed in certain water authorities, one at Christchurch Council, in fact, one in another large area in Australia. So there are examples where that has occurred, but equally continuing to look at those options that may present itself in the future.
Awesome. Mark, thank you very much. Really appreciate you taking the time and putting that together and sharing an update on Ventia. So thank you, and we'll get you other questions if they come in as well. Thanks a lot.
Thanks for your time. Appreciate it. Goodbye.
Bye-bye. Our final presenter today is TruScreen, and we've got Dr. Bette Edling. I hope I'm saying that right.
Thank you for inviting me.
Yeah. Well, thanks for joining us. So just a quick overview, and then I'll turn it over to you. But TruScreen established in 2013, and they provide accurate real-time screening solutions for cervical cancer. So we're really glad to have you here. and I will turn it over to you, and then at the end come back with questions. And yeah, thank you. So over to you.
Well, thank you. And thanks again for inviting me to speak today. In this presentation, I will tell us a little bit about TrueScreen technology. I will explain the WHO strategy to eliminate cervical cancer. Why does it matter? And what role do we play? And where is the strategy and its implementation? I'll talk to key achievements in the last 2 financial years, bringing us more towards the current status, focusing on China, our biggest market, and then focus on our financials for this year and last year before summarizing the talk. What is TrueScreen? Well, TrueScreen is simply a world-class technology made simple. I love saying that because it is true. It is a real-time AI-enabled primary cervical cancer screening device, and it detects precancerous and cancerous tissues and gives the results immediately to the operator. It uses very innovative technology, unlike anything else in the world. It uses optical and electrical measurements that painlessly detect the abnormalities. On the right-hand side, you can see the device sitting on a cradle which charges the device, and the wand is covered by a single-use sensor. It's important to keep that in mind because that's our consumable, and it's from a business perspective and revenue perspective, that's what gives us the greater and greater proportion of revenue, and we continue basically building up that so-called SaaS pull-through. I'll talk to it a little bit later. The device, as I mentioned, uses AI-enabled algorithm that enables the technology to give independent from operator reading. Why is this important? Because the current gold standards of testing for women for cervical cancer are actually highly operator dependent. No cervical tissue or tissue at all is taken, which makes the device, if you like, not prone to cross-contamination, but most importantly, the examination is painless, which is a huge win with women. The device is a Class 2A medical device, EU certified with CE mark and ISO compliant. So why would a center that screens, and I'm deliberately using the word center rather than doctor, choose TrueScreen? It is because it gives the results in real time, unlike the current tests that basically a tissue gets taken away to pathology and takes 2 weeks or even longer to deliver the results. That woman may be lost for follow-up forever and never even know the results, particularly in lower and middle income countries. The infrastructure cost compared with other tests is much, much lower. The results I'll show you in a moment are extremely robust, the strongest in the world, which makes me very proud to represent TrueScreen. The results are objective, the training thresholds are low, non-doctor can easily and confidently perform the examination with this technology, and they do in the world. The device is portable, and as I mentioned before, it doesn't take any tissue. Here on this slide, what I am showing you is our trajectory, but in a different way, not just by years, but the amount of clinical trials that have been underpinning the if you like, robustness of the device and the technology. Why is it important? Because in medical devices, this is critical. Nobody would trust a technology, and as patients, we wouldn't trust any technology unless it was robustly tested. We are so proud to say that over 40,000 women were examined in clinical trials alone. Last year alone, last financial year, over 140,000 women were examined by TrueScreen in commercial settings, but this is just a clinical trial background that we hold. On the right-hand side, you also see the current generation of the device and our most important milestones that we've passed. One of the proudest moments was a incorporation in New Zealand and listing on New Zealand Stock Exchange in 2014. I've mentioned WHO strategy. Why is this important? It is because the cervical cancer is a global public health emergency, and I am deliberately using this word. It is a 4th largest killer of women around the world, and it is a largest or 2nd largest killer in many countries in lower and middle income countries. It is really truly global emergency. WHO rolled out the strategy in 2019. and it put out 3 firm targets to be achieved by the end of the century in order to make this cancer go away, essentially eliminate from humanity by the end of the century. We really do have a real shot at getting rid of this cancer as the first ever cancer in humanity. TruScreen contributes to the 70% coverage of screening. And as with every global strategy, it takes time, right? So where are we in terms of our trajectory? 2019 rollout, where are we now? This is an example of the APAC, and you can see that screening is lagging, right? Why am I talking about this all? It is because it provides incredibly important, perfect timing for our technology to be adopted globally. And in fact, we are making strong inroads, not only commercially in countries, but also talking with NGOs, including WHO, about uptake of our technology beyond where we are now. Here I'm showing our current markets that are quite important to mention. Our biggest market remains and will continue being China. We currently expanding to 4 countries, Vietnam, Saudi Arabia, Zimbabwe, and Poland in Central Eastern Europe, while maintaining presence in Russia and Mexico, and currently evaluating countries like Indonesia and India. On the left-hand side, you see our registrations. This is important in the world of medical devices and biotechnology. Effective co-investment model with global distribution has gotten us that far, right? We hold a small and lean headquarters in Sydney, Australia, where we hold intellectual property, service and manufacturing, and manage the network of distributors and shipping and logistical supplies, whereas our distributors focus on the country's local knowledge and influence, and that has served us well, that model. Our key achievements and sales growth in 2023-24 is presented here. Not surprisingly, our top achievements come from China, again, on the back of the largest ever trial performed in China. Remember that slide I was showing you, cumulative number of women examined. The biggest to date comes from China. Just 2022, this large trial was completed. It took 2.5 years to do. And these results are absolutely outstanding, showing again performance better or on par with gold standards currently used in the Western screening services. The results were presented at the American Society of Colposcopy and Cervical Pathology, which is the biggest annual meeting in the world, and the results are currently in publications. On the back of it, what we have been awarded, what the technology has been awarded in China is 2 national guidelines, which is a huge milestone for a company our size, and it matters immensely. Many competitors would want to be where we are, and they will not get there for years. TruScreen was added to KOGA Blue Book, which is a textbook which took 4 years of collaboration between NGOs, academics, and government. And it put out an entire chapter on TruScreen, advocating, as you can see on the left-hand side, use of TruScreen as a tool for screening in China. And another second largest organization in China, CSCCP, Chinese Society of Colposcopy and Cervical Pathology, has put out specialist gynecologist guidelines advocating use of TruScreen. So China is doing extremely well. In last year, a financial year, we've achieved over 1 million sales. In this half year, we already smashed that revenue, and we are currently implementing devices in addition to normal commercial operations in a so-called National Health Check program, which is a screening program for population. That program is led nationally, and up to 10,000 women will be screened with various preventative tests. China is very big on prevention and continues to want to advance it. And we have contributed to that program already for the next 3 years. So we all know China is a big market, but how big is it? Well, depending on the market research, the size of the total market for cervical cancer or cervical cancer screening can vary. Here in the Business Insights report from 2020, we are anticipating that based on that, by 2026, the market for cervical screening in China may reach 3.4 billion USDs. Again, I have to caution us because depending on the market research, the results may be slightly different, anywhere from $2 to $4 billion. But what's consistent is the CAGR. The CAGR is usually around high single-digit numbers. This is for individual current tests being used. And it is quite commonly in double digits, including high double digits. So in this business report, in market research report, we are seeing a APAC market. So the growth is really projected for entire cervical cancer management that includes screening. Proportion of it is screening, about 1/3. And this market in our region is likely to reach up to 4 billion USDs. And again, estimated CAGR growth is 7.6 across all interventions. So where are we in China? In China, we currently have over hundreds of commercially operating devices in 22 provinces. This pipeline of installations is somewhat outdated. About 2 months ago, when we took a cut and where we at with implementation of the devices, we monitor that on a monthly basis. So our next cut will be at the end of this month. And as you can see, a very steady pipeline of implementations. I mentioned SaaS at the beginning of the presentation, single user sensor or our disposable. Why is it important? It is because it's our consumable part of the business. And during COVID, when China was in full lockdown, we obviously got affected. Our SaaS pull-through, as we call it, which is the SaaS use per center per device, was about 85 per center on average. The potential average pull-through of SaaS we expect should hit about 300. Just at the half year, we were sitting on about 100, just over 100, maybe 110 per center. So the operations are revving up quite quickly. And our key accounts, some of them are presented here, will reach well over 500 of SaaS per month pull through. That basically tells you how big and how busy the center is. In other countries, we are making very strong commercial inroads. Vietnam is particularly exciting because Vietnam has got a very booming economy and a government that supports innovative technologies. We have achieved 2 installations in 2 major referral hospitals in the countries, the 2 gynecology oncology hospitals, not just any hospitals, and 4 are coming within the next few months. And there is some exciting news that I'll be sharing, hopefully on media in January about Vietnam, which I can't talk about right now. Zimbabwe is doing very well. Zimbabwe has got Ministry of Health screening program implemented for last about 18 months. Thus far have screened over 14,000 women, and the program is poised for expansion. We're currently in discussions with Ministry of Health and what could that look like. Saudi Arabia has commenced commercial operations just a couple of months ago. We announced it to a market. And this is the largest private hospital network in not just in Saudi Arabia, but in the region, in the Middle East. Dr. Suleiman Al Habib Medical Group. They have commenced the operations. They've already started working, and we look forward to seeing what kind of growth trajectory they can get with the expansion. In Mexico, we maintain our presence and we keenly await a COFEPRIS approval for entry into public hospital system. COFEPRIS is a national regulator. That's basically a gatekeeper for us to roll out the device nationally. In Eastern Europe, we also made very strong inroads despite COVID and pandemic and Ukraine war. Here, the slide is presenting just very briefly our financial results in 2023 financial year, just for your awareness. We had managed to keep the operations steady despite being a medical device company during COVID time. And we took that time to decrease our loss year on year by making smart choices to withstand the difficult time of COVID. And I am very pleased to say that we're currently ramping up our operations, focusing on improving operations, not just post-COVID, but in general, reducing COGS, strengthening partnerships internationally, not just with our distributors, but also with NGOs and other organizations that hold decision-making power, such as WHO, and driving growth, commercial growth. In short term, we'll continue maximizing the impact of the guidelines, and not just in China. We're using the guidelines in, for example, just last week, we had a large medical symposium of 130 KOLs, from key opinion leaders, doctors, and experts from around the world. And the impact of these guidelines is felt well beyond China. We will continue expanding our operations in Zimbabwe, Saudi, and Vietnam, while growing the presence and further expanding into the regions, and obviously continue improving the technology. Longer term, we hold ambitions to expand the uptake of technology globally through entry into other guidelines and converting the device into and the technology to more diagnostic and perhaps beyond cervical cancer. Our top achievements this year, just really a snapshot of them. Our revenue is growing very strongly at half year, comparing with the same period last year. We grew 30%. So we basically rebounded from COVID and continue growing quite strongly. We've held this large global medical symposium, virtual symposium just last week. 2 national guidelines and very strong operations in those countries that I've mentioned. This is where we're at, and the solid line basically shows you roughly where we are at in terms of installation of our devices and where our SaaS is projected to fall at the end of this year. And I'm smiling looking at this slide. So without further ado, we are experiencing global expansion and growth. China remains our biggest market with huge opportunity. It is a technology of the immediate future, and it is addressing growing and recognized medical need with very, very strong clinical backing. Thank you. I'll take any questions now.
Thank you. Great presentation. And there are questions just around topics on sales growth and the competitive landscape. Can you talk about what the competitive landscape looks like out there from others trying to address these same markets?
Thank you, Doug. Look, we are a true disruptor. We disrupt the current paradigm. The current competitors are the large multinationals, Roche, Abbott, Hologic. They're big names in this industry that I represent. So we compete in such a way that nobody does what we do, right? In terms of direct competition and basically making inroads into current cervical screening paradigms, which is why guidelines are so important, because that's a national backing of the validity of this technology being better than the current status quo. When I think about and when we talk about internally about our direct competitors, there are just a few who primarily focus on image recognition. And what they do is take an image of the tissue and then run it through various algorithms, also AI algorithms, but not really providing a diagnosis, just telling you what the image represents. That market is growing also quite quickly. However, there is a limitation to these technologies in that way that they cannot diagnose, they cannot tell the decision maker whether intervention is needed or not, which TruScreen does. It tells you whether intervention is needed or not. And the image recognition is bound by human ability to recognize image, because it is humans that wrote this, if you like, patterns of recognition of images. Whereas our method scans the tissue. It's a more physical kind of method, and it does so more reliably and through mathematics and physics, right? So This technology with additional development that we currently planning and have plans for further development will exceed expectations of humans. So at this point in time, we are a market leader and we will continue being market leader for some time to come. If there is one copycat in China, which is trying to amass support in China, but unfortunately failing because of the lack of robust clinical evidence, which is why I always talk about that, because it's our backbone. It's our credibility and reliability. It's all in public domain, all in published literature, and doctors and nurses trust that kind of source.
Interesting. And can you talk about, I guess, the production capacity? Is it there and available to fulfill the growth that that hopefully is coming?
Yeah, our SAS is manufactured in China by an Australian company that resides in China, and we have like I'll base my, if you like, discussion on last year alone, right? But last year we sold 140,000 SAS. This year we're already well on a path to exceed that target, right? So we know that the factory, the facility, the supplier of SAS has ability to expand, easily double the production, right? So we are covered for next few years. However, the growth that we are preparing for can be quite fast, right? When we're expanding to 4 countries, if 4 ministries of health came to us and said, we need devices next year, how will you supply them? So we currently are in planning phase to continue growing the operations, right? Both for device and for SAS. Not quite sure how is it going to look like. You've just asked a question that is really hot on the discussion. So I will probably be reporting that next time I come to NZX.
Nice. Well, last question, and this is just kind of one that's coming around the topic. You've got different markets in different countries, and how do you scale the sales in all these different environments, and what's the strategy there, and to the point kind of unlocks what you're
Yeah, it would be lovely if it was a more uniform world, right? But it isn't. It's very different. Each market is very different. So in each market, the strength of our relationship with distributors is served us well, because distributors do know their market, they understand the decision makers, and we, through continuous presence in the market through the distributor, we can not only verify what we know from our own understanding of healthcare environment and market research, but they, if you like, revise it and refine their approach and the picture every single day. So we are that way, we're very agile, we can respond to what's needed. In terms of scaling up, the most important thing for TruScreen is to be sticking with the forecast, right? And getting a forecast every year is an important exercise for us. We are currently about to start our forecast for next year, and it will take another 2 or 3 months before we set on the figures. And that's the best way that I can answer the question of how do you scale up. We've learned that our plans in the past, which were too ambitious, failed. And for example, a long time ago on Generation 1, we went into Indonesia, right, and thought that we'll expand overnight. Well, it doesn't work like that in healthcare. So, so you've got to be very well prepared, very analytical, and take your markets one by one and continue monitoring and learning. One of the exercises that we currently are undergoing, or that's currently basically something that we practice, we developed internally ourselves, is our own way of modeling the SAS pull-through in different markets. And we currently have 3 profiles of countries that we are working with. A large publicly centralized system like China, another more privately hospital and network-based system such as Mexico, Poland, and a very different system of very lower income model, right? Just like Zimbabwe. So all these different profiles of the countries require different approaches when you plan for your growth, including sales growth, including future, not current, but future potential for taking over some of the channels of selling, right? And doing it differently.
Yep. Fascinating. Great. Appreciate those answers and you spend the time. It's a great story. And yeah, we'll look forward to the future updates. And thanks again for joining us. Appreciate it.
Thanks so much, Doug. Thank you. Bye.
So that, and thanks to everyone out there listening. We will send out a recording link to this broadcast as well. And thanks to all the presenters, and have a good afternoon. Bye-bye.